Hey everyone, welcome back to your weekly market outlook. This is for the 24th of November 2025, obviously the final week for the month of November. So let's just get this started because we do have the slew of data that the market has been waiting for. Obviously, we are going to be looking at the employment numbers coming out from the US. That was from last week. And if we take a look at the unemployment claims there, they went up a little bit. It actually went down a little bit. But if we take a look at the unemployment rate, that ticked up a little bit higher to 4.4%. Now, if we take a look at the numbers here, obviously we're getting a little bit of a mixed reading here because the NFE numbers, that was kind of delayed. We actually do see an increase in the NFE numbers. So it's kind of the opposite of what we have seen from the ADP NFE numbers. So it'll actually be very interesting. But the FOMC meeting minutes was there, and the concern was for December rate cut not to happen. It might still happen, but it's kind of divided. And obviously the government shutdown is more than 40 days. Kind of put a little bit of a lid into that because FOMC is kind of reacting with blind data as it is right now. Right. Other than that, if we take a look at the manufacturing numbers, it's all pretty stable coming out from last week. Retail sales number, a little bit of a drop there in the UK. Right. This week, we're obviously going to be looking at the end of the month here. We're expecting the PPI numbers to be released in the US there. And if we take a look at the numbers that we're anticipating, obviously the Australian inflation number, it's going to be one that's going to be on Wednesday as well. RBNZ in terms of interest rate decision, we're kind of looking at a potential for a 25 basis points cut as well. So to sum up the month, it's obviously we kind of miss half of the month in terms of the government shutdown, so there's actually not a lot of the fundamentals to work with. And in terms of the accuracy of the data that we are getting right now, I don't think that is quite accurate as it is. So expect a lot of revisions to come in, especially in the month of December. All right, let's move on to the technicals here. Pretty stable for the Aussie here. Now, if you take a look at the Aussie here, obviously the range 64, 67, that's pretty much still intact. We're now at the lower area here. Again, this is more or less a stable currency. I do expect the 64 level to actually still hold as it is. We're expecting price to kind of stabilize between 64 to 67 until the end of the year for the Aussie here. So I don't think there's anything surprising coming up from the Aussie here. Technicals do point to a little bit more of a downward pressure. So, it's just something to keep an eye out for. All right, Euro USD. That bearish order block, which was previously a support for the euro, that has been tested twice, and it has been proving to be a very strong resistance for the euro as it is. Now, if we take a look at the RSI and the stochastics, we do see the RSI attempting to kind of recover a little bit. It might correct itself a little bit, but again, we are expecting a very strong resistance to come in at 1.16 to 1.1650 on the euro USD. Nothing much has changed as it is. Considering that the weekly open here, it opens below the pivot level. If we round it up, it's going to be at 1.1550 again. Immediate support that we are looking out for is definitely going to be 1.15. If price is pushing lower below 1.15, then we do expect further low to happen. We do expect a potential for that move towards the swing low in August this year for the Euro USD. Sterling, similar situation here. Again, there's a lot of downward pressure, especially on the sterling here. But, for now, I think the low at 1.3 psychological level, that kind of still holds strong for the sterling. So this one here is probably more of a tight range here because we're so close to that psychological level of 1.3. Unless that level is broken, I don't expect the sterling to continue to slide down. In fact, any recovery above 1.3, 150, 1.32, or once we are able to surpass that, we might see a much better recovery on the sterling compared to the euro. All right, the last one is dollar Japanese yen. Now, if we take a look at the dollar Japanese yen, I just drew a new trend line there. If you take take a look at the comparison between the two trend lines, just focus on the trend lines first. It is a sharper increase. We're looking at a 45-degree incline here compared to the previous 30-degree incline on the dollar yen. So what we are looking at here, it's not really a stable uptrend. It has gained speed significantly, and when that happens, we should be very concerned that there might be a potential for market to kind of correct itself, market to sell off really, really quickly. And if we take a look at the price levels here, this has already exceeded the levels that the Ministry of Finance has mentioned before, which is 156. In fact, we actually kind of put it up a little bit higher towards 157. But if we take a look at the high from last week, it actually nearly touches 158. So, you can see that sell-off on Friday there. I think some profit takings are obviously happening here. And whether or not this is actually a sign of collapse on the dollar Japanese yen, the technicals are not indicating that as of yet. The RSI in terms of the trend strength remains very strong, and the stochastic is not giving us any potential divergences in the market. The only concern that we have here is that this is really far away from the Ichimoku cloud, and it is at a level that has exceeded our target levels here. So, for this one to kind of push up even higher, it has to correct itself. How far down we're looking for in terms of corrections. As long as it doesn't break below 154, I think the uptrend is still going to be intact for the dollar Japanese yen. I think there's a lot of credit traders looking at this, and planning to hold longer positions on the dollar Japanese yen. It's likely going to pick them back up at 154 or 155 level. So yeah, something to take a note of. Immediate support for this one is definitely going to be 156. So far, we haven't heard of any indications from the Japanese government or Ministry of Finance in Japan to potentially intervene. Not even verbal intervention is actually mentioned. The only thing that was actually mentioned was basically that the Bank of Japan is not ready to hike interest rates, but I really doubt that's going to happen any moment soon. I think there's just a lot of other political stuff happening in Japan as it is. I don't think this is actually going to be the main focus for them for now. So yeah, I think a lot of traders are going to be taking advantage of this, but just keep in mind that this has already exceeded our initial target of 156. So we do expect a potential correction to happen on the dollar Japanese. I'm not expecting a drastic trend reversal or anything like that. In fact, we're still going to be looking at a test of 156, 155 up to 154. These three levels are going to be the levels that a lot of carry traders jumping back into the dollar Japanese yen. So something to keep an eye out for. All right, so that's pretty much it. We're wrapping the month of November, and have a fantastic week ahead.